In this video, I will show you the best trading strategy with MACD, which anyone can learn easily. The Moving Average Convergence Divergence is also known as MACD, and that's one of most used indicator by traders. MACD is a trend-following indicator based on two moving averages. So let's jump to the charts and I'll show you how to find and add MACD for you to use. This charting tool is TradingView and it's free to use with two indicators. First, we go to Indicators section and then type MACD, and it's this one. Just click it once and it shows below the chart. You also might want to add it to your favorite list by clicking this star symbol. Here you can go to settings and change the parameters of this indicator, but you don't need to change those for this strategy. So how does MACD work? MACD indicator contains four components. MACD line, which is the difference between two moving averages, the 12-period and the 26-period. Signal line is the 9-period moving average of the MACD line. Histogram graphs the distance between MACD line and signal line. And zero line, which is on middle of the histogram. When MACD line is above signal line, price usually goes up, and when MACD is below signal line, price usually goes down. So what we would like to see on the MACD indicator is MACD and signal line crossing. The further that crossing happens from the zero line, more accurate it will be. So in other words, we are the trend change on those crossings. Okay, there's a MACD crossing the signal line, so let's see how it would have targeted. I usually put stop loss just below the previous candle low or above the previous candle high. But if there is either a support or resistance level near, I usually put my stop loss below or above that level. If that previous candle is very small, I might put the stop loss based of candle that is second previous. Also, if my entry point is after a huge bullish candle for long, then I usually put my stop loss just below the middle of that bullish candle, because otherwise that stop loss would be so far that there's no good risk to reward ratio available. And many times when pullback appears, it only goes as far as half of that bullish candle. Risk to reward ratio, I like to put to 2 or 3, but I'll explain this more later. Here both of those would have been successful targets. There's another crossover on the MACD and signal line. Let's see how it would have gone if I entered a short trade there. As you can see, it would have eventually hit the target, but before that it would have been stopped because of this spike here. But let's add another indicator that would give us a much more reliability and accuracy to make the decision when to enter and exit trades. So let's go again to the indicators, and then we type DEMA to the search, and then we choose this one, DEMA, EMA indicator. Then we go to settings and we'll change the periods of these moving averages. But we don't want to change this data source because it's already set for candle close. This first length we need to change to 9. This second length we change to 25, and this last one is by default to set to 200, so let's keep that. And last we click this EMA here, so it changes these to work as exponential moving average. Then I want to change colors for all of these, but that's because I've used to keep them on different color, so you can choose whether you change these or not. I want these to show better, so I change them little more thicker. And then we are all set. Oh wait, Actually, yes, there's this background color which you can keep or set off as you like. It affects whether it is highlighted to show the crossing of these 9-period and 25-period moving averages. Now we are all set. Because we added these 3 moving averages, we are now looking for crossing on both the EMA and the MACD. This way, we can get much more accuracy to enter trades on the right time. Here we have this nice entry point for a long position. MACD and all moving averages have made a crossover, so this is ideal setup for entry. We set stop losses earlier and risk to reward on 2, and as you can see, it would have hit the target. So let's look another entry point. Now, when we are above the 200-period moving average, we want to look for long entries and crossing on the MACD, and also crossing on the 9-period and 25-period moving averages. Here we have the setup for long position. Set the stop loss and risk to reward ratio on 2, and as you can see, we would hit the target again. But now comes the part that I mentioned earlier. As we have this bullish trend and candles are closing so high above the 200-period moving average, we might want to get more effort from this trade. What I usually like to do, I'll set that risk to reward on 2, but only for 50% or 70% of the position size. And for the rest of the position size, I aim higher. As long as that 25-period moving average does hold on support, there's an option to keep trade ongoing. Of course, it depends which time frame you are trading. Smaller time frame is easier to manage manually, and higher time frame, well, for that, you need to look for support and resistance levels, which you want to aim your profit target. You may also want to move your stop loss to break even, so you don't risk to end up losing on that your original trade. Here you can see the MACD crossing the signal line, and candlesticks aren't making higher highs. Also, the MACD and the signal line are far apart from that zero line, and the 9-period and 25-period moving averages are far away from 200-period moving average. So when there's that many hints forming, you should take notice that there's a high possibility of trend reversal, and maybe even for a short position. This strategy is so good that it works on every Forex pair. Let's look another pair, example EUR/USD. Here's the same setup, but as you can see on the 1-hour chart, there's that massive bullish candle. If you notice that MACD and all of those moving averages starts crossing, and you don't want to wait until candle close on 1-hour chart, then you should change to a smaller time frame so that you can find your entry point sooner. That's a massive candle even at 15 minutes time frame, but as I mentioned before, if my entry point is after a huge bullish candle for long, then I usually put my stop loss just below the middle of that bullish candle, because otherwise that stop loss would be so far from the entry point. As you can see, the combination of these two indicators, those work pretty good together. That's all about this strategy. If you would think that this strategy might help you trade better and you like the video, please hit that like and then subscribe. And visit on my website. There's some articles for trading and some reviews of prop firms and brokers too. Thanks for watching.